Ahoy pirates and welcome! Today we're going to talk about the 45-degree angle, which is a market profile signal that will give you an edge in your trading, both in understanding what the market is doing and specific entries for trades. I'm going to give examples of both, so stick around till the end of the video. This all started with an email that I received on Monday night from a member of the Pirate Traders Brigade asking, I was wondering, did you go short at the resistance you marked at 51.92, and how did you know it was going to be the high of the day? What he's talking about is that during the Brigade live stream at 12:24, I marked two potential resistance levels above. Now, obviously, I had no idea that the higher one would become the high of the day, but I did see them as good opportunities for trades, whether going long and looking for a place to take profits into resistance, or trying to go short at resistance to take profits back at the fairest price to do business, what we call the POC. Either of those were excellent opportunities, and that's why the levels jumped out at me. So the market did end up breaking higher, pushing into that first resistance level, and then coming right back down to the POC. It turned around, went back up, pushed right into the second resistance level, reversed to a tick, and came right back down to the POC again. But to understand how I knew the potential that could happen, you got to go back to the live stream I was doing on the Bookmap channel before the market even opened, where I mentioned this. And then lastly, the resistance in the overnight range. This is a 45-degree angle from the high to the point of control from the overnight range. That is likely to act as very, very strong resistance. So even if the market wants to make new all-time highs today, even if it wants to get above 97, it's going to take some serious effort to get there. So that means I don't want to go long, for example, on a look below that fails, go long and fall in love with that trade. I want to go ahead and take profits in resistance and look to re-enter, because they may need to just grind and grind and grind and grind today to fight through this 45-degree angle and make those new highs. So the first thing you want to understand about the 45-degree angle is it refers to the overnight inventory, not the regular trading hours. So I separate out the regular trading hours as being 9:30 a.m. Eastern to 4 p.m. Those are the ones that you see as the sort of purplish, bluish profiles here. And then the overnight is from 4 p.m. Eastern to 9:30 a.m. Those are the light blue profiles that you see right here. And that differentiation between the two plays a big part in being able to use it in trading. So the way that you read a 45-degree angle is if from the overnight low moving up or from the overnight high moving down, the market creates a 45-degree angle. Now, it doesn't have to be 45 degrees exactly. It doesn't have to be a perfect 45-degree angle, but the general idea is just that it is from the highest tick moving down. If you have a little bit of a thinner range above and then a 45-degree angle somewhere else in the range, that is not a 45-degree. It has to be from the high or from the low to actually be a 45-degree angle. Now, what do we think about when we see the 45-degree angle? So as with the example that we just looked at, when the market creates a 45-degree angle, essentially what is happening is as the overnight traders are trying to push the market higher. So in this case, the overnight traders were trying to get above the previous regular trading hours high, and they kept pushing and pushing and pushing and pushing. And every single time, they just got smacked down and smacked down and smacked down and smacked down. That's what creates that sort of perfect 45-degree angle, is just sellers defending and defending and defending and defending all night long, or buyers from the low. And essentially that increases the odds that the next day in the regular trading hours, even if the market has momentum, once it starts to go against that 45-degree angle, that momentum is likely to run out. So you can see here a dip below the overnight low, which became what we call a look below and fail. Normally, a look below and fail would be very bullish to see that we're going to get tons of momentum to the upside. But because of that 45-degree angle, We knew that the higher probability was that the market was going to have to grind and grind and grind into those levels before it could finally break through the next night. Now, the 45-degree angle is just one piece of information. It definitely does not always hold as support or resistance. It is just one thing to take into account with other pieces of information. I would never put a long at a 45-degree angle low or a short at a 45-degree angle high purely because there's a 45-degree angle. Zooming out, we'll just take a look at some other examples. So here we had a 45-degree angle low from the overnight. The regular trading hours came back down, turned it into support, turned around and went back up. Same thing the next night. It wasn't a perfect 45-degree angle because we didn't go straight from the low up, but that's good enough. 45 degrees, market came down, turned it into support and continued higher. Again, they don't have to be a perfect 45-degree angle, but same conceptual idea, held as resistance. 45-degree angle, held as resistance. Again, right here, 45-degree angle from the low. Market never even came back to retested it and moved higher. Here's an example of a 45-degree angle from the high that did not act as resistance. The market did have to play a lot of tug of war first thing in the morning, but once it broke through, it was able to get a lot of momentum to the upside. So it's important to note it doesn't always hold as support or resistance. It is just one piece of information to take into consideration. Once again, here's a 45-degree angle from the low. The market fought and fought and fought, but finally broke lower. Here's a 45-degree angle from the low. The market came back down, turned it into support, and headed higher. Now, another way that the 45-degree angle can be useful is not just as an entry sort of signal intraday for the market, but more as just giving us a better understanding of what the market is doing over time. There was a great example of this last month between the week of 222 and 229. The market was pulling back with price the whole week long. We just kept making lower highs and lower lows, and the market was just working its way lower, which was bearish to see. But what did it keep doing every night in the overnight market? 45-degree angle, that one held. The next day, 45-degree angle, that one broke. So how do we use that information? Well, the 45-degree angles are telling us there are buyers stepping in. The buyers are defending. The buyers are defending. But it's not enough. We still need a bit more of a pullback. So we shouldn't be overly bullish, right? Next day, 45-degree angle. Again, they tested below, ended up pulling right back up. And this, again, not a perfect technical 45-degree angle because it didn't start from the low, but similar concept. Next day, it held as support. That was an inside day. Again, not a perfect 45-degree angle because it didn't start from the low, but next day that held as support. So even though intraday, these 45-degree angles may not have been super helpful for entering trades, seeing that the market again and again and again was defending the lows in the overnight, refusing to let the market go lower, was a sign that buyers wanted to get the momentum started once again to the upside. So don't ever take a trade purely because you see a 45-degree angle. You need more data to confirm or deny it, but it is a reliable signal. Another thing that is worth mentioning is sometimes you get overnight ranges like this one right here, where the market just went nowhere all night. And it just grind and grind and grind and got tighter and tighter and tighter and tighter in this range. That is not a 45-degree. Okay, a 45-degree is the momentum is completely smacked down. This is just a lack of momentum either way. It is not that the sellers were forcing the market down and the buyers were forcing the market up. It was that the market was running out of buyers and sellers. So yes, coincidentally, that 45-degree angle held as resistance at the high. And yes, we did have to fight through that 45-degree angle at the low, but they were still able to take the market lower. Okay, so if it's just a super tight range like this, don't worry about the 45-degree angle. Just see it as balance. And when the market opens, assume it could break either way with equal probability. Well, that's it for the 45-degree angle. I hope you enjoyed the video. If you did, please give us a thumbs up. Make a little comment in the comment section telling me that I have a beautiful face, whatever you want. Don't do that. Don't do that. But just like, subscribe, notification bells, send me your sperm in the mail, whatever you want, okay? Thank you so much, and we'll see you next time.